and Senior Portfolio Manager at ASK Investment Managers and managing more than 125 crores of asset under management. Now, today we'll be talking about the performance of the ASK Lighthouse portfolio, stock selection, markets, as well as budget 2024. Welcome to the show, Sandip.
Thank you so much, Satish, for having me.
Thank you so much for your time, Sandip. Now, to start with, let us, if you can take us through the performance of the fund for the month of May, and specifically, this is a new fund. It has picked up well. If you look at the recent performance of the fund.
Yeah. So luckily, Satish, the performance for the fund for us has been good. The month of May was around 8.9% return for the month. Rounding it off to around 9%. The benchmark for the fund is BSE 500 TRI, which had given a return of around 0.8, 0.9%. So roughly the outperformance was to the extent of around 8%. And fortunately, the previous month and the current month have also been good.
No, absolutely. And in fact, your fund has actually come in one of the top 5 funds for the month of May under the PMS category. And, just like every fund, I'm sure you also have some sort of selection criteria, how you pick stocks for investment. If you can just also elaborate on that part as well.
Sure. So in this fund, we employ a mix of top-down and bottom-up strategies. Firstly, we select a few themes, which we largely do on a top-down basis. Having selected key themes that we want to invest in, we map out the various sectors that are a part of that theme. So just for an example, let's say if exports were to be a theme, it is not a theme in this fund currently, but if it was to be a theme, IT would be a sector, automobiles would be a sector, textiles would be a sector. If consumption were to be a theme, then FMCG would be a sector, again, autos would be a sector, QSR would be a sector. So like that, firstly, we select themes. After selecting themes, we map out the various sectors in that theme. After mapping out the sectors, we draw out the various subsectors within each sector. After that, we look at the complete value chain within each subsector. Having done that, we select stocks on a bottom-up basis. So, Kshitij, let me illustrate that with an example. So, one of the themes in the sector are infrastructure. Within that, power is a sector. Within power, we could have subsectors like thermal, renewables, nuclear, hydro, etc. Then within each subsector, we will map out the complete value chain. So, there is a power financer, there is a utility, there is a power plant builder, power equipment supplier, transformer supplier, conductor supplier, power and cable supplier, coal supplier. Then within this value chain, we pick up stocks on a bottom-up basis. How do we go about selecting stocks? Firstly, we look at only those businesses that have a very strong competitive advantage. Secondly, we do not want to compromise on management quality whatsoever. Thirdly, we look at a margin of safety and the risk-reward profile basically needs to be beneficial to us for the long term. We select only those businesses that have an inherent leadership attribute which will lead to a greater shareholder value creation. So within each part of the value chain, we go about evaluating and assessing only those businesses that fulfill this criteria. And since we are running portfolios of around 15 to 30 stocks, we ensure that the various sectors, various themes are very well represented on this bottom-up basis.
Absolutely. Now, thanks for throwing light on that, Sandip. Now, we'll definitely come to the various themes that you're looking at. But before that, if you can also elaborate on the fund's investment objective and if someone who's looking to invest in this fund, what is the kind of time horizon they should be looking at, and who should enter the fund at this point in time?
Right. So, Kshitij, the investment objective of this fund is to invest in a few focused themes or sectors at a
Okay.
given point in time, wherein structural transformation is underway. Uh,
Hmm.
and the idea is to construct a portfolio of businesses across a range of market capitalizations. An
Okay.
ideal investor in this fund is a person who is looking for a differentiated proposition, as this fund invests in a few themes or sectors,
Hmm.
and having a time horizon of a minimum of 3 to 5 years. Uh, there needs to be investor cognizance of the concentration risks in a focused fund, which is different from diversified equity portfolios. What we mean by structural transformation when we look at a theme is there should be changes that are underway in the sector or theme that are deep,
Hmm.
long, durable, not transitory in nature, and which
Okay.
basically alter the way in which businesses is conducted in that entire sector. So it is essentially a rising tide which will lift all boats, but we obviously select only the choicest boats to ride. Uh,
Yeah.
these changes are such that they have the power of surprise within them. While we understand and appreciate the direction of surprise, which is upwards, but
Right.
we do not know the extent of surprise, the quantum of surprise, the shape of surprise, the form of surprise, and hence we believe that structural transformation, which essentially means higher growth, longer combined with longer growth, creates a
Okay.
multiplicative effect which alters the character of the business. It enables a business to gain scale, it enables a business to gain
Mm.
size, it enables a business to attract the right partners, vendors, clients, and it structurally alters the multiples which are ascribed to the business, because that entire
Right.
business is transforming. So that is the kind of stocks that we are looking to invest in this fund.
Absolutely. And Sandeep, although you just touched upon the themes that the fund is looking at, if you can also elaborate in specific, what are the themes that that are in focus from the fund perspective and from your as a fund house perspective, and why are these themes in focus? Is it because of the India story, or there's another theme that you're following, which make these themes attractive at this current point in time?
Sure. So this is a fund which would be investing in 3 to 4 themes at a point in time, and we
Okay.
look to invest for a few years, let's say maybe 2 to 4 years, and then there is agile management of themes, implying that we
Right.
would be changing these themes every few years. Currently, the themes in focus are manufacturing, infrastructure,
Okay.
energy, and defense. If we look at the government expenditure on investments in the economy, I'm talking about the central government, from 2006 to 2020, let's say for a period of around 15 years, it ranged between 1.6 to 1.8% of GDP. There was an odd year when it really went up above 2%, but then it again fell down. So there was never really a sustained increase or investments in infrastructure. But
Right.
come FY21, since the COVID period, we've seen a very sustained and secular increase by the central government in infrastructure and in manufacturing. And so from 1.7% of GDP, which was the budgeted allocation in FY20, FY25
Mhm.
projections are more like a 3.5% plus. So more than double of that. and our guess would be that this number will continue to increase. Also, Kshitij, what will happen is that private sector capex cycle is likely to pick up, maybe by the second half of this year and onwards, because for the last few years, private sector has not really been investing apart from a few sectors. So it is the entire country is in an investment mode in some sense. The government intends to increase the manufacturing component of our GDP, which is about less than 15% today, to around 25% levels. And towards this end, it has given various programs and incentives like the phased manufacturing programs, the production-linked incentive schemes, ease of doing business, etc., etc. And we are seeing a sea change in the entire manufacturing landscape in the country, which we want to leverage and participate in this fund. On the back of these changes that we are seeing in manufacturing, there is a similar investment which is going on the infrastructure side, because obviously manufacturing does require a lot of logistics. And within infrastructure, we are seeing entire sectors changing, whether it be in ports, airports, railways. And this fund will be investing in all of these and all the associated and allied sectors. Manufacturing also does require a lot of energy, and hence energy is the other key component in this fund. As far as defense is concerned, which is the other key sector for us, defense, we would be increasing our spending, about doubling it over the next few years. Plus, there is this focus on import substitution and Atmanirbharta, which has resulted in our import component less than halving and domestic manufacturing more than doubling. In addition to this, India is also now looking at playing an increasing role in the export market on the defense side. And the government has set up steep targets. So all of these four sectors or themes have a lot of on-the-ground structural changes. They have earnings momentum. We are seeing businesses transforming themselves, and we want to participate in this. The advantage of this fund is that it is not limited to any one sector per se or one theme. So it is not just infrastructure, not just manufacturing, not just defense. We have the ability to shift around various themes and sectors. We don't have any such limits for any one sector or theme.
Right. Now, in fact, Sandip, the choice of sectors are at this point in time are very apt or prime but there's another thing which, if we look at the recent performance of some of these sectors, they've done quite well, including defense and probably the energy sector, the power sector, and a little bit of PSU. So one thing that could probably come in as a question from the audience could be is there more steam left at this point in time for the defense part, or the story is already written? Some bit of clarity could come in budget 2024, where we could see some spending, but at this point in time, and as you rightly pointed out, that you're also looking at the sector wherein there's import substitution, and the government is trying to export most of the things and getting a revenue out of it. So what are your views on that?
That's a very valid concern or point, Kshitij. There is no doubt that we have, over the last 1.5 to 2 years, seen a normalization of valuations across these sectors. These sectors were at depressed valuation levels for a long period of time, because let's say till a couple of years ago, there was not much action on the ground, and wherever there was any action, it was in fits and starts, and hence these businesses never got their maybe their due, because nothing much was happening anyway.
Due share of credit, you could say.
Yes, true. Now, while a normalization of valuations has happened, we believe that there are still three key levers to make money from in these sectors. Firstly, we think that growth is going to surprise on the upside. In fact, in our fund, in the recently concluded quarterly results season as well, we saw that a majority of the companies actually surprised on earnings. It could be on revenues, it could be on orders, or it could be on margins. The second aspect or lever available to us for making money, even from these levels, is the longevity of growth. If investors or parts of the market are thinking about earnings or valuations or businesses from a 1 or 2 year perspective, maybe that is one view to have. But what we believe is that this is a story which is a multi-year story, and the good growth is going to continue for many years to come. And when we combine stronger growth with longer period growth, the effects are not additive. They are more than additive, maybe more like multiplicative in nature, and which takes us to our third lever, which essentially means that a stronger growth combined with a longer period growth alters the size of business, the scale of business, the character of business, the capital efficiency of business, the ability of the business to draw in partners, clients, technology, infrastructure, and which basically alters the way the market views those businesses, and the structural multiples that get ascribed to these businesses is far higher than what was done in the recent past. So it really depends on a reference point as well. In my view, a lot of our reference points for these sectors is the past history that we've seen, while what we are focused on is the transformative future that is ahead of us.
Absolutely, and that's the right thing to be looking at, where we are standing at this point in time. Now, Sandeep, let's talk about a little about markets as well. If we look at the first 6 months, I mean, yes, we'll be next week probably, will the last week for the month of June, and it has nothing short. We could say that it is nothing short of a volatile 6 months where we've touched, record highs again and again, and we've saw some bit of volatility also, post election results. So how do you see the rest of the 2024, or you could say, the H2 of 2024? Will it be a repeat of what we saw in, H1?
So, Kshitij, if we look at the first half, yes, the markets were volatile, but that is the nature of the beast. It is the inherent character of the markets to be volatile, and the first half was, a few key events that the markets was kind of focused on was the elections, which is, let's say, now out of the way. There was also the expectation that we would see a cut in the US Fed rates, which did not materialize. But globally, most markets have been strong. If we look at the second half of the year, on the domestic side, a few key events to watch out for would be the monsoons, because there is distress on the rural side, on the agri side, and a good monsoons is really required also for containing inflation and boosting farm incomes. The markets would also be focused on the budget, because this is the first budget from a coalition government, if we were to say. So could there be volatility around these events? The answer is yes. Then on the global side, obviously there is now a stronger expectation for a Fed rate cut in the second half of the year, and then towards the end of the second half, in November, there are the US election results, and hence the markets would be focused around that as well. In addition to this, we do have these geopolitical conflicts, and what shape and nature and form they take going forward would also be watched out for. So I won't be surprised. It's very difficult to call out markets in short periods of time. Having said that, if some of these events do turn out to be positive, I won't be surprised if the markets again hit newer highs. And again, if it is not the case, then given that we've already seen a run up, could there be some mild consolidation? That is also a possibility.
Right. And Sandip, earlier in our conversation, you did point out that at this point in time, you're looking at 4 to 5 sectors. And yes, in times to come, there could be a churn in the sector. So what are your trigger points for, let's say, exiting from a theme? Is it the data part that you're looking at, or the government intervention? If you can just quickly point out some of these, the bullet points, you could say that.
So when we are looking at entering a theme, we want the theme to be relatively young. So when we would be looking at exiting a theme, it will be the exact opposite. When we believe that a theme has relatively aged, the greater part of the value creation that we envisaged has already happened, or we believe that the runway for growth is no longer that long, or we find better opportunities elsewhere. That is the point that we will be looking at exiting a theme, and we would look at macro top-down indicators and also maybe some bottom-up indicators while arriving at these decisions.
Right. And, considering it's a good 15-20 portfolio, I mean, the stocks that are in the portfolio is around about 15-20, if I'm not wrong, right? Is it 15-20 or 30-40?
It's the number of stocks around 28 at the current point of time, but we are looking at around 15 to 30 stocks as a construct for this portfolio.
Right. So, for a 15 to 30 stock portfolio, how do you plan to manage the risk for the same?
Oh, that's a very interesting question, Kshitij, because investment management and risk management actually go hand in hand. Firstly, our risk management comes essentially from a bottom-up stock selection. We buy good quality managements. We buy businesses with strong competitive moats. We buy leadership businesses. Growth risk is taken care of the fact that businesses would be in a transformative phase, and so growth is likely to be far higher. We would be watchful of balance sheets while investing into businesses. Valuation risk we take care of by ensuring that there is a margin of safety at the time of buying the stock. We have very stringent liquidity parameters so that there is a certain amount of liquidity that is available for each particular stock. While this is a concentrated portfolio in 3 or 4 themes, the investments would be diversified across these themes. Plus, from a stock perspective, we will not be investing more than 10% of our portfolio in a single stock. And also, this is a portfolio which will be investing across market caps. So from that aspect, also the risk is well taken off. All of this is at the time of investing, but there is obviously continuous monitoring as well. We have various risk triggers to ensure that the entire risk management framework is actionated properly.
Right. And in fact, if you can also, I was just looking at the chat and we got one question. We got a couple of questions, but one question which is more relevant to the conversation is, I'll just quickly read out. So Abhijit wanted to ask if in case if you can help him understand, will private banks as a theme will work in the next 10 years' time?
Sure. So currently, we do not have private banks as a theme in this fund. But over the longer term, if the question is that do private banks offer value and will they continue to grow? I would like to believe that they would. If we believe that Indian GDP growth rates at a nominal level are going to between 10 to 12%, credit growth has to be much higher than that. And private banks play a critical role in that credit business. Private banks have the infrastructure, they have the technology, they have the leadership, they have the management to kind of cater and leverage the opportunity that is out there. And yes, on this longer term time horizon, private banks are definitely likely to generate a lot of wealth.
Right. I hope, Abhijit, you got your answer. And in case, for viewers who are, watching the show right now, in case they have any questions relevant to the fund, do let us know, and we'll try and take that up right here with Sandip on this live stream. Now, finally, Sandip, you can also, throw your quick points on Budget 2024. That's going to be the big event that the market will be watching out for. What are your expectations from the big event?
Yes, Kshitij, surely the markets would be focused on the budget. Also because this is the first budget from a coalition government, and this will highlight what is the roadmap, what are the priorities. But I would also like to highlight that the budget is not necessarily the only platform available for the government to undertake reforms, and that, as we have seen in the previous years as well, is a year-round affair. Having said that, few of the key things that are likely to happen in the budget. A is continued spending on the infrastructure side. We've seen this trend, especially since COVID times, and we would expect this to continue. Along with this is the expansion in the scope of, let's say, the PLI schemes, which will aid the manufacturing sector. Both infrastructure creation and focus on the manufacturing sector will aid employment generation, which is the need of the hour. We also expect a focus on rural incomes, agricultural reforms, and investment, in the agrarian side of the economy. There could also be support for the MSME sector because they are the other key engine for employment generation. On the taxation side, one would not expect any significant changes for corporate taxes, but on the personal income tax side, some relief is likely for the middle class, so that disposable incomes increase, which helps in boosting consumption.
Right. Some golden words coming from you, Sandeep, because I'm sure retail investors will be very happy to know that there are some expectation of a reduction in in the personal taxes. So yeah, hopefully we see something around it, and that will definitely boost consumption, both rural and urban. Well, on that note, thank you so much for your time, Sandeep, and that's all for now. But do stay logged on to Leading Markets live stream for more on news, business, and economy. Thank you so much for your time, sir.
Thank you, Kshitij.